Welcome back to another episode of Palisade Radio. This is your host, Collin. On the line with me today is returning guest Jordan Roy-Byrne. He's the publisher of thedailygold.com and also publishes a couple times a month a market update using fundamental and technical analysis through Palisade Radio. Jordan, welcome back to the program.
Collin, thanks so much for having me.
Yeah, I want to start today by actually pointing to a chart we just put out through Palisade Research, and we'll put that up on the screen here so everybody can see it. You've also put something similar out in the last few days, but probably done a lot better as you are a chartist and you know how to run technical analysis. That's something we don't. But we were looking at the HUI chart and just noticed that it's kind of going in this channel on very low volatility, and oftentimes that means that when it gets to the end of that channel, there's going to be a breakout to the upside or the downside. So first question for you is, what do you think is going to unfold here for the gold and gold stocks?
Well, Collin, as you know, I don't have a crystal ball, and we can't predict the future, although some people think they can. But that aside, everything I'm looking at is leaning towards a breakdown in this sector. Unfortunately, as you noted, the gold stocks, they've been trading in. You can draw a triangle if you draw on the bottom. You can draw a flat line from the March to the May lows and just connect that all the way until today. And you can and then you can go to the February high and just draw a trending line there. And so whether you're looking at the HUI, GDX, XAU, any large cap gold stock index, you'll get the same descending triangle pattern. And yeah, I think the break is going to be lower. Everything I'm looking at is telling me it's going to be lower. And I don't want to. I know we'll get into more details later, but for the first question, yes, I think the risk is definitely favoring a break to the downside. As far as timing, it's hard to say. I mean, it could happen in 1 or 2 weeks, or maybe 4 or 5 weeks. I would think somewhere in between that range. I think July is going to be ugly. I will say that, unfortunately.
If I were in the camp of being a gold bug and looking for reasons why gold could break to the upside sooner than later, one thing I would point to is the fact that the US dollar, which was over 100 on the index for a few months and looked like it could continue climbing, has been in a bit of a downtrend for 6 months now, something a lot of people don't realize. If you look at the Canadian dollar to US dollar, you'll notice that the exchange rate has come back a good bit in favor of the Canadian dollar, that is. And so wouldn't one look at the US dollar and say, this should be good for gold?
A great question, Collin. Yeah, it should be a lot more bullish than what we've seen happen. I mean, we've seen this, I don't want to say major decline in the dollar, but fairly significant, down from 103 to I believe it touched 95 today on the dollar index. And it's despite that happening, Collin, I mean, the dollar's been breaking to new lows in the last several days. And look at gold. I mean, gold is off its highs. It's not even close to its high at 1297. And in addition, I mean, let's just go back in the last couple months. The gold stocks peaked in February, and silver would have peaked, I think, in February, if not for, I believe, in April. I could be wrong, but it made a higher high for a day, and that was a false higher high there, because after that, then silver was down. It had that 15 days in a row, or 17, whatever it was, where it was down every day for multiple weeks. So long story short, the gold stocks and silver have not confirmed the strength in gold. That's a bad sign. And gold itself recently is not confirming the weakness in the U.S. dollar. So given this huge decline that we've seen in the U.S. dollar, I mean, Collin, if this was 10 years ago, the precious metals would be going crazy. Gold would be at 1375 already. The miners would be 30 or 40% higher. So this is just not bull market action that we're seeing in the sector, given this huge weakness in the dollar. I mean, precious metals usually move ahead of movements in the dollar. They tend to lead the dollar. It doesn't work this way where, the dollar goes down a lot, then precious metals need to start moving moving much higher. It doesn't happen that way. Precious metals lead. Last comment on the dollar. I think the dollar is probably going to make an important low very soon here. And the long-term trend of the dollar is still very bullish. I mean, there's very strong support around 93 in the dollar index. And so as long as the dollar doesn't go below 93, its cyclical bull market is still intact. So I would look for the dollar to put in an important low here.
Jordan, following the narrative that the bull market in gold and gold stocks resumed in January of 2016, you had a pretty epic 7 to 8 month rally that lasted into August. And since then, we've had either downward or sideways trading action for about 11 to 12 months. Now, thinking about a long-term bull market, say the one we had from 2000 to 2007, one would think that you'd be in an upward movement during a bull market most of the time, with these quick or somewhat quick sell-offs during the bull market. It seems right now like it's kind of the flip of that, where we had a very strong rally and then a long time where we're going sideways or down. Is this unusual?
Well, what's unusual, I would say, is the fact that if you look at this current consolidation compared to the consolidations during 2001 to 2011, most of those consolidations, you would see the miners they're trading kind of in the upper range of that previous move, that big previous move. And if you look at those consolidations, the miners are trading in the upper range. And if you just look at the 200-day moving average, you can see that it's trending up most of the time. Whereas what's happened now is the 200-day moving average. I'm looking at the HUI. Okay, for the most part, the Huey failed around the 200-day moving average right before the election, failed again in February, failed again in April, failed again in early June. And the 200-day moving average is sloping lower. So the consolidation that we've seen in the last 6 months or so, or 5 months, wherever you want to start it, it's a bearish consolidation because it's below the 200-day moving average, and the 200-day moving average is now sloping lower. I mean, if we were in a bull market, it's not so much the length of the consolidation, but it's really the price action and where it's trading with respect to the previous move. And this consolidation has been kind of in the middle of the previous move, and that's not bullish. What we'd want to see is we'd want to see it trading near the upper range of the previous move, and not in the middle of the range like it's been doing.
July, you said, is set to be a very ugly month potentially. So let's dive into that a little bit more and define what ugly could look like. We're talking about things like the HUI, the gold price. Where do you see a sell-off going down to? And then on the bright side of things, what does that mean afterwards? When are we going to resume a bull market?
Well, looking at the Huey, I will start with GDX because I follow that. GDX has a measured downside target. I mean, the key support there is at 21.00, and if GDX breaks below 21.00, then you have a potential downside measured target of 16.5. So that's 25% downside. And I think with the Huey, it's very similar. I mean, you have a low right around 180. If you look at a descending triangle pattern, the triangle is about 40 points. And so if it breaks below 180, you can measure the target 40 points lower. So your downside target for the Huey could be 140. It's trading right about 189 as we do this interview. And with respect to the next month, again, the Huey's trading at 189 right now. And so if it breaks 180, the first target from there would be the December 2016 low at 163. So that would be my downside target in July, would be that December low. But ultimately, Collin, the breakdown from this pattern projects to, again, 16.5 in GDX and 140 in the Huey. Now, yeah, let's talk about the positive side of that, which is, I know we didn't talk about gold, but I've mentioned how gold and silver could be making a major, if they do decline and break support, they could be going towards a major double bottom pattern. If you remember back to the 1999-2001 period, not just gold, but commodities made a double bottom in those years. And I think we could see something similar with precious metals. I mean, just with gold and silver. I mean, maybe their second low is a little bit below the first low or a little bit higher. I don't know. But assuming this plays out, like I'm thinking, Collin, this will be setting up for a very strong bull market to take place. Once we come out and we make a bottom, and we come out on the other side. Probably when could that be? My guess would be sometime in the first half of next year. I mean, it could be a year from now, or maybe it's 7 or 8 months from now. I don't know, but that's the time frame I'm looking at. But I mean, after that point, I know we can talk about fundamentals and what might drive that. But I mean, when we start to see a bull market take off again, in assuming we break down and we get extremely oversold, we go down to these levels. I mean, we will be seeing again massive moves higher in the stocks like we saw in 2016. So that's definitely possible. As we get into 2018 and in the spring, a year from now. If we are turning from a lower level and starting a real new bull market there, we will be seeing again massive moves higher in the juniors, in the stocks. I mean, I know it's difficult for people to believe that right now, considering the way they're trading and considering that they're probably going to break lower. But I mean, you and I, Collin, we've seen this happen many times. The negative is, yes, in the near term, the market is looking bearish, very high risk of a breakdown here. But once you move out 6 to 9 months, I mean, we're going to see some incredible bargains again and a great buying opportunity in this sector.
Jordan, what fundamentals would be required to really launch a bull market like we saw from 2001 until 2007? And I think one thing to address is the general equities in the United States continue to rally, and the dollar is finally coming off, so maybe that's a good sign. Anything else to look at?
Well, one thing to look at technically would be the gold to the stock market ratio, and that another reason why I'm bearish here in the short term is that it looks like it's about to break lower in favor of the stock market. So that's negative. But Collin, we've talked about the long-term negative correlation between gold and the stock market, and ultimately we need to see the stock market run into problems, run into a bear market, and we have a recession, and that requires lower interest rates and then highly inflationary policy. I think it's going to be fiscal spending. You're going to see a lot of government spending on infrastructure and things like that. I mean, if the next recession and downturn gets really bad, you'll see even much bigger government spending than we can fathom here and now. And so that will really be the driving force. But the reason why that's so bullish for precious metals is because you will have interest rates going down, you'll have rates being cut, yet at the same time you'll have the government doing all this spending to re-stimulate the economy again. And that, of course, is very inflationary. And so you'd have real rates would be falling again and going into negative territory. And that's very bullish for precious metals. The problem here and now is inflation right now, it's peaked, it's going lower, and interest rates, at least in the short term, they look like they're going to move higher. So that's stronger real rates over the next several months. That's negative for precious metals. But again, when we see the stock market run into problems and begin a bear market and the economy rolls over, that will really be the positive catalyst for precious metals to bottom, turn around, and begin a real bull market again. So that's what I'm looking for. And I mean, Collin, it'll be bullish for commodities as a whole, because if you look at China also, they have their One Belt, One Road program, which is going to require lots of raw materials and commodities and the like, and they're going to have huge spending on their One Belt, One Road project. And you couple that with our infrastructure spending, I mean, these are going to be a very bullish catalyst for commodities. Not so much in this year or maybe even the first part of next year, but once we get into the end of next year, 2019, 2020, I mean, you're going to see a lot of spending, much higher global inflation, and of course, gold will be the first market to really sniff that out. But I don't see that starting to happen until, with respect to gold and sniffing that out, until next year. But the long-term fundamentals, Colin, they really are setting up very bullishly for precious metals. But I mean, the here and now, over the next 3 or 6 months, they definitely look negative, before we're going to see sustained positive fundamentals for the sector.
Excellent. Well, Jordan, anything else to add for our audience before I let you go? Anything we missed?
No, I think we've covered a lot, Colin. I would just tell people, don't get too emotional about it. Raise cash if you can. Hedge if you can here. But this is the time to get defensive. I mean, there's very little risk that the juniors in the sector are about to go much, much higher here. I mean, there's very strong risk that things are going to break lower, and raise cash, get really defensive here. And then if I'm right about this, then 6 to 9 months from now, you will be looking at a fantastic buying opportunity in the junior sector, and you'll be able to buy most things much lower than where they're trading right now.
Excellent. Once again, Jordan is the publisher of thedailygold.com. He's got a free newsletter you can subscribe to, and also a premium service. He's been doing a great job and updates premium subscribers sometimes on a daily basis, definitely on a weekly basis. I'm, of course, one of those premium subscribers. Jordan, thank you very much for coming on the program today.
Thanks so much for having me, Colin.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?